Good morning, Forex friends, and welcome back to mouteki.com. It is Tuesday, April 12th, just around 9:30 a.m. Eastern Standard Time. What I wanted to share here was a technical approach towards the dollar-yen setup that I've been looking at. And what you can see here is that we're starting with a blank screen. Now, where I start my technical analysis is always on the 4-hour chart, as I'm looking for the key areas in the market, which I'm looking for either buys or sells. The very first thing that I do when I open up my chart with the blank chart is say, okay, what is the overall trend on the pair? And basically what we can see here on this dollar yen, that we did have a very nice uptrend that was intact here in this market, okay? And recently what we have done is we have broken through this uptrend, and we are now looking for potential here to the downside. Now what you have to ask yourself, is this a reversal, or is this just simply a retracement of this large movement, around 500 pip movement that has occurred here on the dollar yen? And that's where your technical analysis starts to come into play and shows you clues towards what you need to be thinking as opposed to what you see, okay? So first off, there is our first clue here on this 4-hour compression. Now what we also want to do is we want to go ahead here and take our retracements, and we want to fib this movement here, okay, from the bottom of the top, and we want to have these areas here in this market. I'm going to make them blue so I can easily depict that they are parts of this movement north. Now, what we can see here first off on this 4-hour compression is just taking a note here at the top. We have a set of railroads. We can see in here that we have two dojis at this point. We see a large exhaustion candle, and then we see the breakthrough here of the line demand in this market, and we start to see this market continuing south. Now, here at this 382, the market did not respect that 382, and it blew right through it. So now what this market is telling us is that if indeed this is a part of this uptrend, it is still going to attack a next area of retracement, potentially being that 50% and then falling through to the 61.8. So what I want to do is I want to approach the setup and look for opportunity to take this short for at least that 50%, giving me a target if I can find one. So let's go ahead here and continue on. Now next, what I want to look for and see is I want to take a look here and see what is this market respecting as opposed to targets, because you got to always look for areas where the market is trading for and look for respect at those areas, okay? Because when you were trading, you're interested in where you were going, not necessarily as where you're getting in, but where you are going. And if you see respect of where that market is going, then you start to build up more evidence towards your overall logic of what direction you're looking for the market to go. So what I can see here automatically is that this market has stopped down here around this 83.50 level. Now, if it was sitting at a 382 and it bounced off of that, then I would be in short-term belief that this was just a retracement. We're going to continue trading further north. But since we achieved a level below trading that 382 and we not see any respect of that 382, now we're starting to think that potentially this is not going to be just a retracement of 382, but we can see further 50, 61.8, and for that matter, it could be an overall reversal here, and we could have a downtrend now in creation on the dollar yen. So let's go ahead and take a look. And remember, our targets are coming from a very important part of trading and technical analysis, and that is the support and resistance. So what we say is that we want to go ahead here and find a downtrend from the past and see, is there any resistance that has stopped this market? And if so, then we can see that the market is attempting that in this area. So what I can see back here is I have a downtrend, I have a sideways movement, I have a downtrend coming out of that. So what I want to do is I want to grab here my resistance points from this market and see what is going on. Now I don't like to always use the tops. Okay, so what I'm going to just do is grab this one right here, grab this one right here. Okay, and what I really like about this one right here is you can see that this has been a resistance. The market came down. We saw a exhaustion candle come up here. That means the sellers were sitting there, and then the market turned south. So right here, this looks like it's going to be a target for the movement coming down, because resistance, once the market gets above it, is then going to be a target for the new movement down. So let's go ahead here and just move ahead and see, what we can already have lining up here in the market. We can see here amazingly is that notice where this market stopped, okay? Look at that. It was resistance, resistance. So now that this market has come and traveled up above, now on the new movement south, we were looking for respect of that resistance to be a target, and bam, we can see that that was a area that profit taking occurred. And we can see that furthermore if you just take it down per se to a 15-minute level and take a closer look, okay, and see exactly what occurred off of this level. And there you can see that we had the market turn for just around 100 pips off of that. So what that also means is that we can take that level right there, since we had a 100 pip estimated pullback, and we can go ahead and fib that and look for areas now to the downside that are going to act as fib retracements. So let's just go ahead and do that. And again, what we're doing here is building pieces and adding pieces to our puzzle. I'm going to make them red so that we can go ahead and continue to look and depict the difference. So amazingly, what we can see right now is that we are seeing a reversal on a 50% retracement of this movement south. This is the movement here south that is broken out of the overall uptrend. That is why I've fibbed this level here. We had also had around 100 pip pullback, so that is a significant pullback. So I've fibbed that level. Now, what I can see is that immediately here we saw a sell-off at that 50% level. So now we've seen the payment of respect of a previous resistance now acting as a target for a movement down. So now what I want to do is I want to say, okay, first off, let me just go ahead and delete this level. And now what I want to say is, where am I further levels here in this market where I can start to look and see? So let's go back to that downtrend in this market. Okay. What we can see here is moving further on that we do have a resistance level right here. Okay. But since this market has gone up above it, you'll see what I'm talking about right now. Since this market has gone up above it, open and close, and then gone below it, I don't want to look for this area here, okay? And that is just something that I've realized by putting time in the charts and looking for theory on how the market respects the areas of support and resistance. So moving on further, what I can see is I have this candle right here, okay? And what I want to do is I want to shoot that right there because I can see that that was a major resistance. Look at that sell-off that occurred right there at that level. So what I'm saying now is that this market has taken out this level, so my next level is going to be here at this 83.29 area, okay? And further below that, moving on, I can see right here, okay, that this was also resistance. Now, it's important because these are resistances of an overall downtrend, as you can see right here in this market. Okay, it's very, very easy to see is that from this point here, this was all a downtrend, all the way down to this point right here. Okay, so these resistance points are good points to look for in the market, and these are clean areas because notice, this point right here, the market has traveled now, open and close up above it, and has not yet come below this line. So this is still in play in my theory of support and resistance. The way you look at support and resistance may be totally different. So now what I've done is I've set up two further points here that I can look for this market to respect. Now, since we have a quick moving move here also, what I want to do is I want to place my fib expansions, okay? And what you can see here is I don't need to adjust that third point because that third point is lining up perfectly with my 50% retracement that occurred, okay? And in the past, a lot of people would ask me is, hey, why don't you adjust that third point? And the fact of the matter is that through my research and through my studies of the charts, I've come to the conclusion that it is in fact valid to adjust that. But a lot of times when I first started off using the fib extensions, I wouldn't adjust because a lot of the retracements that were key retracements were 50% retracements, okay? And again, that's all stuff that you realize when you put time into the charts and study and analyze the marketplace that you're looking to trade. So looking here at what we have going on, we can see interesting developments happening here already on this chart. And those interesting developments are these, folks, is that you can see right here, okay? Here is that first resistance that we're now looking to be respected, okay? Notice how it's lining up with my first fib expansion, okay? I have them labeled 1, 2, 3, and 4 because I know what they mean, okay? So this is my 618 fib expansion, okay? This number 2 here is my 100% fib expansion. Now, notice how the 61.8 expansion is lining up with the first area of resistance we're looking for profit taking to occur, and how the second 100% fib expansion is lining up with the second point of resistance that we're looking to act as a profit taking. So, what is telling me here, that what this market is telling me is that, hey, okay, look, what we're trying to do is one of these. We're trying to make our first movement, we're pulling back for our retracement, we're going to make an intraday trade down here to the 83.30 level, and we're going to pull back off of that. And then what we're going to do the next time we do is one of these, okay? And then from there on, what happens below here, I will look for when the time comes, but I am within range. You know, right here I'm sitting at around the 82 price level. We're trading at 84.17. You know, 220 pips. It usually takes the yen 2 to 3 days to accomplish movements of that. Taking out the days that you won't see movements, directional movements, you'll just see a consolidating market, which are going to be your retracements, and you know what is exactly happening. And again, that's all what trading is about, is anticipating what's going to happen, and then when it happens, you react to it. Now, if you win, you win. If you lose, you lose. And that's why you use your money management. You don't enter a trade unless you have the proper risk to reward enabling you to enter that trade. So let's continue here and go ahead and look for further data. Okay. Now, what I want to do is I want to take this all down to my next compression, and that's going to be my 1 hour. And on my 1 hour, what I want to do is I want to look for a channel on that 1 hour compression that I'm currently trading within. Okay. Now, the reason why that's important is because you want to see, is this market being traded technically, or is it just being traded on speculation? Okay. And if it's being traded technically, then you will have a channel developing on your 1 hour compression, and then you will have areas where you can look to enter the market on the tops or bottoms of the trend channel, depending on which direction you're trading. In this case, we're looking for an opportunity to trade south. So now what I'm looking at here, okay, is the 1 hour compression of what's going on. And immediately what I can see here, it's sticking out to me, is that I can see that these lows here, okay, are lower lows. So definitely we're seeing here an intermediate downtrend occurring. So what I want to do now is see, can I get a channel? And I like to use the equidistant key on this. Alright. And you know what's amazing is right away here, by just applying this one more key here, I can pick up a great piece of information. And what that piece of information is notice how this market, okay, goes from this point of the channel to the top of it, okay? And then we're trading here around the middle to the top. We can't get that break. We don't get that break. And then here when we get all the sellers, you can see that here, you know, sideways market. You're coming in a sideways market south, so you anticipate that you're going to be coming out of it south. And you can see, and notice how it made it all the way down to the bottom of the channel. Now, markets can't move into one directional movement, so what we anticipate is we're going to see a pullback. Because sellers don't continue to sell at the bottom, they want to see a pullback so they can get in. And we see this retracement of the 50, okay, and immediately we saw a sell-off come in on there. A nice sell-off, you know, just around 40, 50 pips on there. But so now what we're seeing here is that this market is looking for further areas. And what this market right now is telling me, folks, and this is going to be the trade that I'm going to look for, it's going to be this right here. I'm going to look for this market to come within the line here of the top trend wall. And I'm going to look for my trade down to that first area being the 61.8 fib expansion with an overlap at the 83.29 level of a previous resistance from a previous downtrend, now acting as a profit target. And then from there, what I will do is I will exit that trade. I will wait for the market to pull back, wait for it to come within range here, and then I'll look for my next trade down right here to the 100% fib expansion, overlapping, here you can see in green, the second point of resistance from that previous downtrend. Okay, and again, that's what trading is, folks, is anticipating what's going to happen and reacting. Now, can and will this market turn on this level? I don't know. But my job as a trader is to put together the piece of the puzzle and set up good opportunities. Because, you know, what's great here is that you can say, okay, I'm going to enter right here at the 84.40 price level, okay? I can place a stop of 10 pips up above my last point of resistance. You can see that that's at the 84.40 level. Okay, so there's another point of confluence right there in that market. So and you're going all the way down here to 83.20. Okay, so that's 120 pips that you're looking for in your first trade. So if you're risking 10, 15, even 20 here, okay, and you're going for 120, on a 10 pip stop, you're looking for 1 to 12 risk reward. Okay, on a 20 pip stop, you're going 1 to 6. Can you make that trade? You better make that trade, because that is what trading's all about, is managing your risk and letting the reward take care of itself. Okay, and you can see that this was just a simple approach of 4-hour and 1-hour technical analysis and putting together some pieces of information. Now, what I also lack to show here is that if indeed this is just a retracement of the massive movement north on the 4-hour recent uptrend that we saw, okay, notice what is overlapping here, my resistance with my 618 fib expansion. We have that 50% retracement, as you can see right there, in that overall movement north that we say could potentially be a retracement, that all we're trading right here. Okay, and then notice how that 61.8 is lining up within a reasonable area of around 15 pips of our second area of profit taking. So that's why we break it up into trades and we say, okay, even though we anticipate that this market is overall going to this level here, why not be safe, look for the pullback here, take our first trade, look for a pullback. If the pullback comes in here, then take it down to the second level. But if it breaks right through here, it doesn't matter. Again, anticipate and react. That's all we can do. So if this market comes up here and takes us out for a 10, 20 pip loss, no big problem. But at this point here, given the 1 to 6, 1 to 12 that you were offered, you better take that trade, because again, managing your risk is 100 times more important than managing your reward. Manage your risk and the reward will come, folks. So one thing, once again, that I'll be looking for here is a sell-off coming at the 84.40 price level. As we can see in the past here, that's where we had the sellers coming in on the recent movement. Okay, so that's what we have here. I just wanted to show that. Thanks for viewing, and we will talk to you again very soon.